Hello everybody, welcome to the TraderMerlin show. Sorry, a little minor delay there as I forgot to turn on this wonderful light here so I illuminate this fancy face that you see. Hope you had a great trading session out there and hope Mr. Powell helped you out. I don't think he even knows what he's talking about anymore. It almost seems like he's like a little bit of a younger version of Alan Greenspan, where he'll just kind of mumble on things and you have to question, does he have any touch with reality right now? We'll talk about the Fed announcement today, which of course was the big news, and probably the bigger news is going to be our guest on the program. It's his maiden voyage here on the TraderMerlin show. We'll have Walker England on the program talking about Forex, and basically if there's a Forex firm out there, he's worked for him over the years, so tons of experience. Pretty excited to have him on the show. If you have FX questions, send them on in. I've already tried to get a majority of the questions lined up, so we've got a pretty full show today, so I will keep my small talk to a minimum and keep on rolling. And hello everybody, yes, it is a pretty party shirt, huh? Someone asking me if I was a jugaloo, one of those, we won't even go that insane clown posse or something. No, I'm not a jugaloo. No face paint here. All right, let me start things off with your market update. We'll start things off at the bottom, which was an ugly one out there, Russell 2000. Second day in a row. What's interesting is it almost looks like the exact same 2 days as we saw the previous 2 days. You have these two gigantic green candles, and then the last 2 days, two big red candles, bringing the Russell down 3% on the day. Pretty ugly finish there at 1462.9 for the Russell 2000, by far your worst performer. S&P 500 selling off a little bit. It was funny because as the Powell announcement happened, started to pop to the upside and was looking pretty good. If you saw my Twitter post, yes, that was a picture of my dog just sitting on my couch yesterday going, please play with me. And that's how I feel waiting for this market to have a sell-off. And who knows, we might start to get one here soon. 2 days in a row of negative action for the S&P 500, down 0.67%. 3,184. Still a long way to go until we start to see a major, at least in my opinion, a major pullback. It just seems so damn strong. Okay, crude oil inventories came out last night. They were 5.7 million barrels, which was kind of interesting. It wasn't negative, it was positive. And you still saw crude oil rally today. Not much. It was up 0.31% to 39.06. So just teetering at that $40 mark, just below it. All right. 10-year. Obviously, yields were an issue today. Yields were continuing to drop. Therefore, we saw the price of the 10-year note rally up pretty significantly today. That was a 0.67% run up in that 10-year futures contract. All right, podium time. NASDAQ 100 continuing to do just what it does because that's where the technology is. Over 10,000. Hallelujah. For those that want to have some spiritual music in the background. 10,088 is where the NASDAQ 100 finished at today. That train just keeps on rolling. Thank goodness I didn't short the NASDAQ 100, right? Because that'd just be a BK waiting to happen. 10,088 is where it's at. Milestone. I'm sure those hats are being made right now. NASDAQ 10,000. All right, gold showing a very good move to the upside. Now, this is coming right up into an area of supply at 1750. It was a 1.51% move on the futures to 1747 as we speak. So if you are looking at a short, it might be a decent spot, but it looks pretty good now for gold. 3 great up days in a row. But that's not the best performer. The best performer is the B to the T to the C. Bitcoin 1.63%. Almost to that 10,000 mark. It actually did hit it today. It was at 10,130, so both the NASDAQ and Bitcoin flirting with the 10,000 mark, although the NASDAQ wins. Bitcoin sitting right now at 9,965. All right, I almost feel like I was the guy from Micro Machines right there, just ripping through that as quickly as possible, because I know we have a full slate of stuff to talk about today. Joining me on the TraderMerlin show for the first time, we've got Mr. Walker England. How you doing, Walker?
I'm doing fantastic, Merlin. Thanks for having me on.
Yeah, you look great. Good to see you. Normally I get to see you in studio sitting next to me. Quarantine has prohibited that. Of course, you're in Texas now. I'm in California, so I'm glad I at least get to see you here on the program.
That's right. Virtually, we'll do it in person next time. How about that?
You know what? That's just about right. I might actually set up a second spot in my office here. I'm no longer in the studio, so there we go. My own studio. All right, I'm going to start things, as I mentioned to you earlier, 3 simple questions. We're going to call this the Trader Profile segment since it's your first time. Tell me real quick, what are the answers to these 3 questions? How long have you been trading? What instruments do you trade? And what's your trading style?
Okay, well, let's start from the top. I actually cut my teeth in 1999 during the internet bubble.
Nice timing.
And, had some less than stellar success during the collapse, but that's when I started my trading. As far as Forex is concerned, it is my bread and butter now, and I've been actively trading the Forex market since 2005. So this lapses my 15-year anniversary in the Forex market. Everything else, I trade stocks for the long haul. Like you said, NASDAQ's tanking up. I really don't feel the need to reposition all the time. So I'm just riding the big trends, and I use options as a safety net just in case things start to get a little bit dicey. But more often than not, you're going to find me trading Forex.
Yeah, not I noticed on I'm on TradingView, and I like to look at different groups out there. Notice you actually are putting regularly charts out on TraderView, and I noticed different asset classes out there. So that's why I kind of wanted to ask which assets. Would you say predominantly you're a shorter term guy, swing trader, or longer term?
You definitely have to put me in the swing trading camp, but I would say most of my positions are held for maybe 2 to 3 days.
All right, perfect. There we go. The quick and dirty trader profile out there for Walker England. We'll change the topics here real quick just so we can get a ton covered, because I know you guys have questions that you want answered, and I will do my best to get those questions answered. Today we had Powell speak, and initially it was a nice surge. You heard him say, we don't foresee, we see rates staying kind of where they're at until 2021. What would be your take as someone who's immersed in that FX world for so long? Do you care what he says? Is it influential, or how should we take today's comments?
For me, I say you can't fight the Fed. And what that means is you have to take what they say at face value. You may look at things like the market and say, why is the NASDAQ at all-time highs when we have record unemployment? Those are just funny mentals. Those numbers are funny. They'll make you mental. Listen to Jerome Powell. And the easy money is going to continue until 2021, 2022. So until proven otherwise, you've got to follow the Fed's lead.
Yeah, it's tricky for me because you saw the way that we reacted, and you have two different perspectives of that. And this is where it's challenging as a trader, because you hear him say we're going to have cheap money until 2021, and you're thinking, great, pedal to the metal, markets are going to keep moving up. On the flip side of that, you got to play devil's advocate and think, you know what, well, shoot, if he's saying we're going to have this so low for so long, then that means that they see something really ugly ahead. Do you ever subscribe to that, or is it just, hey, Fed's keeping it cheap, let's go along?
I think you have to be cautiously optimistic, okay? It's one thing to be a perma bear and just deny that the market's in an uptrend. It's another thing to ride these waves and monitor your risk. So as long as things are pointed up, what are you supposed to do? Mm-hmm. Yeah, you can punt a reversal, but you've missed out on one of the biggest moves of the year if you've been doing that.
Mm-hmm. Well, fortunately, I caught a nice chunk of the down move, so it offsets a lot of the losses I've incurred on this wonderful rally to the upside.
Fair enough.
Yeah. I'm going to go to a few listener questions here. We'll start there, and then we can take the viewer questions as we go. Let me see. I've got, there's our title slide. Love that. There's the Forex trading around the world. I got a lovely boot of Italy there. This one was from Dennis. It says, can you discuss how you use the dollar index to help in your currency trade? So let's dive down that one a little bit, because the dollar has been, let's just say, having some significant moves over the past few weeks.
Yes, I always start my analysis with the dollar index. And if you've been to my class or if you've worked with me online, dollar index comes first for the main reason that it's the sign or the directional bias for all of your major pairs. And that's how I use it. The dollar index is obviously down, okay? We've seen a nice collapse from the 100 level, 99, 98, 97, 96, 95. Are you getting the trend yet?
Yeah.
The dollar's down. And we have to follow those trends as long as they last, like I just said.
Do you ever look for turning points in that? What I mean by that is, when we look at this dollar index, which I'll bring up, the viewers actually have a full screen here.
Sure.
You look at that downtrend that really aggressively started, let me give it an exact date there. It looks to be about the 18th of May. We were at a high of 100.47. Now we're at 96.14. Percentage-wise, it doesn't seem like that dramatic of a move, but of course, it's the dollar, which obviously has a huge impact there on global economies, markets, etc. It's beelining straight for those lows we saw back in late March. So does that ever factor into your assessment right now? You're going to be wanting going long pretty much anything that is against the dollar, right?
Ahead of the Fed, we were at key support, and prices started to bounce right after the event. So as opposed to chasing and trying to catch these big breakouts, you've got to be more cautious when you're starting to hit the big figures. 95 is the next big one, followed by that March low. But today was all about the 95.88.
95.88. I'll throw a little line on the bottom there. You guys can see that rip up there. It's challenging because a lot of people are focusing on the U.S. dollar, and I think if you don't want to get caught in the chop, and it's hard to say chop, honestly, right? Because you look at this chart, there really isn't any chop. It's just almost straight down. So that's the kind of the trend we'd be looking to be in. Do you find yourself focusing on the dollar-denominated pairs, or is it, hey, I'm moving away from those dollar currencies just to get away from the dollar madness?
See, for me, traditionally, June is one of those months where the dollar does just that. It chops sideways. And case in point, put up any dollar pair on a 15-minute chart through the Fed announcement. We went up, we went down, we went up, we went down. It was manic dollar.
Yep.
So for me, during these summer months, go check out some cross pairs and find some smoother trends to trade.
A question came in from Felix. Felix says, let me get this one up here. Felix says, can you explain what comes to mind when you see the dollar in a downtrend, and how do you change your trades with this trend?
Well, for me, it's all about bias, okay? And your bias in a downtrend has to be short. Now, that doesn't mean that I'm going to die on the short train as it goes down. Yeah, at some point, the trend does come to an end. So what that means is you've got to be managing your risk. And this is something over the last 3 months that if you're trading Forex, you've noticed we've had several big trend shifts, okay? So you've got to be locking in profit. You've got to be trailing your stops. And if you're using other forms of technical analysis, things like divergence and your swings are all going to help you pinpoint when to hold them, when to fold them, when to walk away, and when to run.
Oh, easy, Kenny. Easy, Kenny Rogers. And that's an interesting one. For Felix, for me, I'm a little more, I guess I would say simplistic, because right now, and we've been saying this ever since we broke that 99 level. You can look back on the shows, and certainly for the USD CAD, that was a beautiful kind of descending triangle that once it broke has just been in a free fall. When you have the Fed basically today saying we're committing to having these rates stay as low as possible till 2021, that's going to put a lot of negative pressure on the dollar, right? Why would anyone want to buy the dollar? That carry trade's not going to be there, right? There's just no extra value in them owning the dollar. So, this downtrend, to me, it seems like it's going to continue. And as Walker pointed out, there are some nice levels coming up. At 95 could be a potential bounce point, but it's hard to fight this trend. So anything against the dollar, like you're going to want to go long the Canadian dollar, you're going to go long the Australian dollar. Anything that's against the dollar is probably your best bet here to go long.
It's funny you mentioned the dollar CAD. That's been one of the bigger players, especially with the correlations to oil. I didn't check the close, but oil's been parked, at least WTI, right around that $40 a barrel. And this big rebound has definitely played into CAD strength, coupled with the weakness of the dollar. So dollar CAD short's been a big winner for definitely the last 3 or 4 weeks.
And interesting, I've got the chart up here of the USD CAD for those that might be interested. And, you certainly want to be going with this trend. My gut tells me that when you have a trend that's this aggressive, and you can see on this dollar or USD CAD, we sold off aggressively as it broke down below. I'll put the floor of this descending triangle. Once you broke down below, let's call it that 138.50 mark, there was an aggressive move, it bounced back up, and then another aggressive move. It would not surprise me to see a bounce here simply because we've closed that gap that goes all the way back to March 3rd. But all in all, I'm a believer that you've got to stay on the side of the trend here, and I would wait for maybe a rally up in that anything with the dollar, and then look to short those rallies.
I agree. And back to my first point, stay patient, don't chase, and line up your shot. And definitely once you're in, monitor your risk, because you're absolutely correct. When you get these extended moves, I don't care if you're trading Tesla and it gets extended. Hey, that doesn't mean that it's going to go to the moon forever, right? We see these drastic pullbacks. After the pullback's done, what happens? Look for the rebound, time your entry, and then ride the next wave up.
Nice. Alpha Intelligence says, does Walker trade weekly and monthly wicks? Are you trading those wicks, or is it just pure numbers on the price axis?
For me, those are just big figure numbers to watch. And it's not that I don't take them into account. It's just my trading style is geared towards shorter term swings, like maybe 2-3 days maximum. So if we're approaching a level on a big monthly wick, yeah, I'm going to take that into account. But that's not the first thing I consider when I enter my trades. And that's just my personal preference and style.
Yeah, no, I like that, and I'm actually drawing some levels out here just because Alpha says I got long today, a long trade on the weekly USD CAD wick. It worked out nice. First let's just quickly, I'm going to draw it here. A demand zone, and I'm doing it rough. I'm not doing exactly the way that I would normally do it, but you can see that there is an area where price abruptly turned, and if we fast forward here, and if you want to do it on the weekly, Alpha, you can see that today's candle fell right into that, or this weekly candle fell right into it. So I think that was a great trade, but it wasn't necessarily the wick. It was more important for me anyway. There was the zone what got you into that one, and when you see it on the daily, it's a lot clearer out there that was that spot to be going long. Not that you're out of the woods yet, right? You're still fighting an avalanche here, but I do think you'll see it pop up at some point. All right, what other questions did we have? There were a few more that came in. That was from Denise asking about the dollar index. This has been a pretty popular one. Let's go to, there you go. Mark says, what are your thoughts on shorting the Aussie? I have multiple questions on the Aussie, but we'll stick with this one. That Aussie dollar, let me bring AUD, USD up for the viewers, has been on an absolute tear. It is just recently turned, and of course it turned right at a supply level going back into December of 2019. What's your take on the Aussie?
See, my opinion, whether it's the Aussie dollar, the dollar CAD, the Kiwi dollar, all of these commodity currencies, you're going to get a theme, are trending, okay? What we need to see, especially if you're looking for a reversal, are several things, okay? We would want to see a pullback in markets. Point blank, carte blanche, we have big drops in risk-based assets when there's something going on globally. So it's risky, but you want to see some bad news coming out in markets. The other thing that could pressure the Aussie is a slowdown in China. And this is actually a big one. China has stopped purchasing as many goods in Australia by about half of what they did last year. So these are the kind of pressures that may form a reversal. But again, the trend is the trend is the trend until it comes to an end. So yes, there was a wick on today's price action with the Fed. Did we get the lower low? No. If you ask me, looking at the Aussie chart, what did we do? We actually just punched up a new high. Mm-hmm. So for me, you got to be cautious, look for the change or shift in fundamental themes if you have to take a reversal.
Yeah, I'm with you on that. I do agree we have to pay closer attention to the macro pictures here, and obviously anything to do with China is going to be impacting the Australian dollar. If you are one of those traders that says, you know what, I want to omit and forget about all that macroeconomic stuff, that's fine. There is an opportunity on a trade on this Aussie dollar to the short side. But again, you're going counter trend. You did come up into those supply levels from December, which I think is pretty good. The question you have to ask yourself is how far of a pullback you think you're going to get, because right now it's gangbusters for that Aussie dollar. I mean, it's moved a tremendous amount of pips over the past couple of months. And again, until we get something that's going to prove that currency is going to start to sell off, then you want to stay to the long side, right? You want to stay in that positive tone with it. Right now, it seems like everyone's shrugging off any sort of bad news around the world and just pouring money into markets around the world. So until something changes, it's going to keep on trending. I mean, we saw the NASDAQ just rip through all-time highs today. That was pretty crazy.
Yes, it's been astonishing, and that's really the only word I have for it is astonishing. Now, back to the question. Don't get me wrong. I have no problem taking a reversal trade.
Yep.
But you got to be aware of the risk. And more importantly, it's got to pay you, okay? And you got to make sure the risk reward levels are there. If you can't lock in 5, 6, 7, 10 times your risk, you're going to get burned more often than not. So yeah, you try out a reversal, but when the market is start giving you hints that, hey, we're in a strong uptrend. At some point, you just have to bury the hatchet and say that the bulls have it and join the trend.
Yeah, if it ain't broke, don't fix it. The trend is your friend to the bend at the end. I mean, they all go on and on. But I actually love reversal trades. I like it. I think that sometimes people get too heavy into the trend and load it up, and that trend is due for reversal. But you're right. The risk is very high of going counter trend there. So make sure you have your stops in place in case you're wrong on that one. What else? Let's see. I'm going to do one more market analysis. Then I'm going to let you guys know. Walker actually writes a newsletter. He's got a Forex trading group that you guys can be a part of if he accepts you. I noticed that the other day. Let's go to the Aussie-Japanese yen, a cross pair. You know, most people aren't focusing on the cross pairs. I know you like the cross pairs. This was from Kevin P. Kevin sent in 3. Kev, I'm probably not going to have a chance to get to all of them, so we'll stick with the first one you sent me, which was AUD-JPY. He says, long on the 4-hour time frame, what do we think of this trade? Entry is at 73.25, stop loss is at 72.81, and target is at 75. So I would normally give TJ, the chart master, credit for putting this one in, but TJ isn't here, so I will do the work myself. Here is that Aussie-Japanese yen trade. I don't know if you have the chart up there. What do you think about that?
Well, the Aussie yen, first, if you're looking long, you got to know that there's that strong correlation with the U.S. stock market. And it goes back to what we said. When we're piling into risk-based assets, our commodity currencies are definitely going to be the first in line. So if you're long the Aussie yen, the first thing that you're doing is following the trend, which is good. And the second thing is you've got that strong correlation of money and the Fed with their printer behind it. And that's just something that we need to monitor because, again, talk about reversals. If there is a fallback, you're ready for it. And it sounds like you've got your risk capped. And just briefly, I'm sitting here looking at the levels. Yeah, it looks reasonable. Just make sure that it pays you and lock in any profits that you have. Because one thing that we know is that these trends can turn on a dime. Merlin, just real quick, could you repeat the stop and the profit target again?
Sure. Let me bring it up full screen so I can read it. The stop loss was 72.81. Entries at 73.25, and the target was $75.
Okay. Well, if your target's at 75, I see that we're trading at 74.91. So odds are you're probably well on your way to take a.
Well, I think that this is a future plan. These are all mapped out. Like, what about this potential trade setup? Yeah.
Oh, I got you. Well, yeah. I guess my only other consideration is if you're trading the trend and you're waiting for that dip, you may want to add in a second profit target. And just doing a quick glimpse, we've got the current high up at 76.50. So again, this is my personal preference. Yeah, you could take off one lot at your close target, but let the other one go, because who says that this couldn't be a runner? We've already seen a big move up on the Aussie, and if that trend continues, we break out to new highs. I want you to be a part of that as well. So just something to consider.
I like it. I'm going to be a total technical geek right now. I'm totally going off on a tangent, but some of you might view this as being a head and shoulders pattern. Of course, if we were to look at that, I'm doing just a rough estimate of what that might look like. Conveniently, I do believe it would put you, it's actually going to go just below that demand zone. Yeah, I'm a big measuring object type of fan. My question for, let me see, the gentleman who posted this question was from Kevin, is I would probably tighten up my area a little bit, my demand zone. I mean, you're looking at 50, right around 50 pip stop loss. That might be a little large. I would want to tighten that down a little bit. Maybe our entry on this guy, I can bring it down to a few more pips lower, get down to 73, let's say 18. I like where your stop's at that 72.81. You're down below the 73 handle. You're giving a little bit of room to move and that lower wick there. All in all, I like those levels. I'm good with that one. There you go.
Yep. And that's one thing, a bigger profit target is going to give you a little leeway if your zone's a little bit wider. Again, a bigger profit target or a bigger second target will give you a better reward to risk ratio.
Yep. That's a great comment that comes in here from Kevin. If it says, my worry would be that if it comes down to that entry, that it would be on its way down to from 75 to 72.50. And you're probably right. I mean, that trend may have now reversed. So that trend would probably continue. And he says right after it might wait might go through. So wait for a confirmation entry. And I think this is the important part here. You have to be careful in saying, if I'm going to be buying at that point at $73, it's come down so much that maybe this is the new trend, right? These trends, they all tend to reverse. So this goes right back to what Walker was talking about. If you're buying in that 73 mark and you say your stop loss is at 72.81, then stick to it. You could be cautious, just like Kevin is saying here, and saying, I'm going to let it go all the way down to 73.17, 73, maybe even 72.90. But once it starts to move back up out of there and confirm, then maybe I'll be more interested. And that's just a matter of perspective of whether you're being aggressive or you're being a little bit more conservative with regards to your trades. And either one of those is right. I can see about both viewpoints there. It's awesome.
Yeah, I'll never tell you not to be more conservative. That's just the sign of the times with this volatility. Hey, if you want to wait for confirmations, do it. That's definitely an approach that I've been using during this recent bout of volatility, especially back in March when we were getting those 200 pip plus swings. Hey, wait a second. Take a deep breath, get a cup of coffee, wait for price to come off of your key levels, and then enter. Yeah, you give up a little profit, but if you're shooting with big enough targets, there's plenty of profit still left out there to take.
Nice. Tell me a little bit about I know you've got a Facebook group. And actually, I got to read this one to you because you may not have seen it. It's actually pretty funny. No, Alpha, Walker's still with OTA. Just the physical classes have stopped because of the FTC thing, and they're now in the process of starting to get everything back on track now that there is a tentative settlement with the FTC. So hopefully things will be back to normal, and Walker will be doing more classes out there. Dave says, I love the name Walker England. I don't think that he should trade. He should. He has the name to be a badass soldier like Chuck Norris. Well, it's funny that you should mention that because the name of his Facebook group is Walker Texas Trader. So you do have the Chuck Norris Texas Ranger type of theme going on there. I like that.
That's right. It's all about the Texas Trader. And if you could see me, I'm propped up in my living room with my Lucchese boots on. So everything's alive and well down here in Dallas, Texas.
Nice. So I noticed on your Walker Texas Trader, you are out there making some market calls and some market analysis. You also have a newsletter. How would anybody get a hold of that newsletter? They have to be part of your Walker Texas Trader group?
Absolutely. And again, it's an open group. We accept anybody. I even allowed Merlin to come in the group.
I know.
So there you go, guys. Restrictions. And I do publish out a newsletter for the participants. And the easiest way to join is first go to Facebook and just search Walker Texas Trader, or email me. And that's going to be at WEnglandFX. So that's WEnglandFX. And I'll get you signed up for that newsletter, and that'll get you involved in all sorts of good stuff. Charts, webinars, newsletters, you can find it there.
I've got your email on the screen, WEnglandFX@gmail.com. I actually just posted in the chat for those of you who might be interested to follow Walker and some of his market musings. It's funny, actually, I'm watching. Kevin, you've already got a new follower. Someone just added it in there.
All right.
People are jumping on. What else is out there of interest to you in these markets? I know that you made a comment on your TradingView about silver. Maybe you can give us a little bit of insights into some of the commodity space. Is there anything of interest there?
Absolutely. And this is one of the plays historically in June that I watch, and I like to take some options positions on. I know gold popped up today, but typically June is a month that's negative for precious metals as a whole. And it's an easier way just to use some barrier options in case you do get a big slide to capitalize with very minimal chart analysis. So whether you're trading the futures contract or using SLV or GLD, again, historically, seasonally, without going too much of a tangent, we do see some bearish movement in June on metals.
And is that kind of a regular play for you? I know that one of my favorite books is the Trader's Almanac, and in that book they outline a lot of seasonality plays out there. And I know like Don Dawson, one of my favorite commodity traders, that's pretty much all he's looking for is seasonality and plays like that. Is this one that you kind of have on your March on your calendar? You're like, okay, it's getting in May. Let's start thinking about going short silver and gold.
Absolutely, and we've already come off of the highs a little bit from last month from silver. We had that nice peak. We're down about what is it? I don't have a chart in front of me, but about 8% off the highs. So we're already starting to get a good move there. And the metal play is just something that we see in cycles, much like the ag products. Wheat in July is another big one. So if you're following wheat futures, next month is historically the big run-up in wheat.
The run-up in wheat as we get ready for, summer consumption? I don't know why it would be higher in the summer.
Harvest season.
It's what?
Harvest season.
Harvest season?
It's harvest season. Mm-hmm.
Do you commitment of traders and things like that and the different breakdowns, do you follow all that stuff when it comes to these futures products?
I keep it on the back burner, and I use it as a secondary odds enhancer. For me, I like to see a separation between retail and commercial, so it's more about the spread than the sheer number than anything else.
All right. Well, you guys, if you have any last-minute questions here for Walker, let me know. Feel free to send those on in our chat. Of course, we were talking about his Facebook group, so if you want to sign up for his newsletter, how often do you do your newsletter? You do a monthly, a yearly? What do you do?
No, typically I send it out 2 times a week. I'm the hardest working man in Forex, so I try to send it out on Tuesday and Thursday. But I do have a 1-year-old, guys, so be patient with me if it's a little late. It's nothing personal, but I try to get out 2 issues a week.
Nice. Well, I'm pretty sure that they would appreciate it since it doesn't. I don't think there's a fee associated with it. Maybe not yet, and maybe that's down the road. But anybody likes information, especially from somebody who's been doing this as long as you have. So let's see. We've got your newsletter. You got your Facebook group, which guys, I have. If you want to contact Walker, his number's on the screen. It's wenglandfx@gmail.com. That's on the screen there. And I put in the chat for those that want to follow his Facebook. You just click on that one. That'll take you straight to his Facebook page. What else you got going on? Anything else? Anything exciting? I need to travels with the wife and the little one there. Are you doing, I get no classes for you right now, right?
Yes, not until next month. So I'm just at home having a blast watching my kid grow up. But I did have a little hiatus. I went fishing with a buddy of mine out here in Lake Whitney in Texas and pulled up some striped bass. So that's my one expedition out of the house outside of a road trip with my family to New Mexico.
Nice. All right, cool. This one just came in, and Gayer is one of our regulars from across the pond. He says, has Walker ever traded the GBP-ZAR, and what do you think of it? Of course, we're... That's the automatic response of almost everybody out there.
Well, first, I'm surprised that nobody's asked me about Swiss pairs because, again, there's just some currencies I don't trade. The Swiss being one of them, the South African Rand being the second one.
Why is that?
I'm not saying you can't make money trading the Rand. I do have buddies that focus on the exotics. For me, it's all about opportunity versus volatility. And yes, while the big 1,000+ pip moves look great on paper, they can just as easily take you out. And for me, especially coming from the broker's side of the business and seeing how thin some of those pairs can be, it's just not somewhere I want to park my money because all it takes is just one liquidity provider to pull off of the bid, and next thing you know, you've got a multi-thousand pip gap, and I just don't want to be a part of that.
It's interesting because you have markets where there are these really attractive looking charts. Like, wow, I could get 1,000 pips out of it, but you bring up an interesting point. There's that risk reward factor, and sometimes the reward is just too damn good to be true, and you got to take a step back there. Are there any others that you really look at, and because you have a perspective that we don't have, and I say we, I'm probably generalizing, maybe some of the viewers here do, but when I say we, I'm referring to the institution side, seeing that back end. And one thing that I think is probably given you a competitive advantage over the years has been seeing retail orders and how the retail public operates. Are there any currency pairs that you would just, having seen what goes on in the back end, just been like, hey, this one, or these, you should really probably stay away from, period?
For me, I'd say the Scandinavians are probably ones that I leave alone, especially things like the DKK, the Krona. Again, it's just so thin. If you pull up the price chart, you're going to see that they're listless at best. So I don't trade any of the Scandies. Even if fundamentally you've got some reason or central banking news, I just leave those alone. On an interesting note, one currency as far as exotics are concerned that you may want to pay attention to, it's the peso, okay? And if you take my class, you know we don't trade the peso in class, but if you're looking for an exotic currency that definitely has a strong trend that gives you a little bit of yield on the side, but you don't have the volatility like the rand. The dollar Mexican peso has actually been a very nice play to the downside over the course of the last month.
All right. Actually, let me see if I can bring that one. USDMXN. Holy cow. I'm actually just brought up the monthly here. I almost feel like there's something wrong with this chart. Like something's broken. Did someone plug in the defibrillator here and just give this thing a pop? I mean, crikey, that's a huge move that happened in February.
Oh, really? It has. And if you're on that monthly, you can see that it's just been slowly going up in an upward channel. Again, I'm not advocating to hop in long or short right now, but this is definitely something where if you're patient, you can buy the dip and continue to ride the trend.
You know, I'm going to go off on a slight tangent here, and maybe later on I'll explain deeper. But you guys, one of the things I learned about Forex early on, and it wasn't from a trading perspective, it was just from a simple practical life example. One of my university professors, he taught finance. His name was Jamal Munshi. Just a brilliant little guy. He was actually pretty short. Just a brilliant man. And every summer we'd ask him, say, where do you go on vacation? And he says, I go wherever the dollar buys me the most. Interestingly enough, if you look at this chart here of the U.S. dollar versus the Mexican peso, what that's telling you is the value. This is showing you that the value of the dollar is getting stronger and the peso is getting weaker. Now, if you go back to the lows of 2012, you can buy twice as much in Mexico today as you could have back in 2011. I mean, that's telling you how weak that peso is, and it just keeps drifting down and down and down. This is a great thing to do for anybody out there that's thinking about a vacation. You can actually there are some charts that will show you over like the last year which currency is the strongest and the weakest. And it's actually been something that I've done as well, which is why I traveled to Thailand so many times, because the Thai baht seemed to always be the weakest against the dollar. And if you've ever been to Thailand, you realize how much you can buy with your U.S. dollars. Obviously, you don't want to go to places where it gets worse, like London. I mean, it always seemed like my dollar was buying me less and less in London. But anyway, a useless piece of trivia out there that really helped me when planning my travels and figuring out how I can get the most bang for my buck. All right. Yeah. I know you went to New Mexico. It's still the dollar over there.
Oh, yeah. As far as they're concerned, it's still USD all the time.
And until you go to the old Mexico, and then you go to the peso. All right, Walker.
Right.
What's that?
Yeah, go ahead.
No, I was just going to wrap it up. You had a last minute thought there?
Oh, no.
Okay.
I had a blast, Merlin.
Okay, cool. Awesome, Walker. Thank you so much. I appreciate you taking some time to come on the program today, getting people orientated with who you are and some of the things that you're offering out there. Of course, you guys can go to his Facebook and join that Walker Texas Trader. It's a link in the chat there. If you want his newsletter, which he does on Tuesdays and Thursdays, you can email him. I'll put that email back on the screen one last time, which is wanglinfx@gmail.com. All right, Walker, thank you so much for coming on. I hope you have a fantastic remainder of your trading day, my friend. Take care.
All right, thank you, sir.
All right, take care. All right. Hopefully I don't spike too much as usual. Cool. I hope that you guys enjoyed that. Walker, just a great guy. He's got tons of experience. I didn't go into his past, which was working at Daily FX, and he used to produce some great content at Daily FX. Emma and David Warner also producing great content out there, and of course now they're kind of doing their own thing. So it's great to have these guys on the program. Next time I bring him on, I actually want to talk more about the back end. What goes on behind the scenes. That's something that most people just don't know about. There's actually an indicator that the different brokerage firms put out that shows you what their databases, their clients are, whether they're net long on a specific currency pair or market, whatever they're trading, tell you whether they're net long or short. And it's really interesting when you look at it that most of the time, the retail trader's on the wrong side of the trade. So sometimes they'll print it and you'll see, hey, 95% of their customers are long the euro. Well, maybe it's time to start thinking about going short the euro. And I always found that to be a very important, an interesting piece that they offer that you can pull up on different brokerage firms. And I know that Walker's seen that type of data. So is David Warner. We talk about that. So I think that'd be a good topic for you guys. Okay, cool. Hope you enjoyed that. Again, if you want any more information, go to his Facebook page. It's pretty cool. He will issue that newsletter Tuesdays and Thursdays. He said, I'm a subscriber myself now. All right, cool. Let me go into your economic calendar for tomorrow. There wasn't a ton of information, but I did want to bring this up because we've been looking at a couple different stocks out there, and they've been going nuts. Lululemon has been one that I found to be fascinating when I looked at the price chart. And I'll show you Lululemon right here. Here's LULU. Lululemon is just one of the most unbelievable charts, and their earnings are coming out. I think that this could very easily be that buy the rumor, sell the news. This is a monthly. I'll go to a daily here so you guys can see the moves. We've got hesitation here right now at that 323. My gut tells me that tomorrow they're going to have earnings. They'll probably have huge earnings numbers just because I feel like that's already priced in by the move that we've seen. I mean, keep in mind, back in March when we bottomed out on this thing, Lululemon was trading at a low of 128. It's now at 328. That's a $200 move in just a couple of months. That is pretty phenomenal. My guess is it'll have a blowout earnings. It'll do what every other company has done that has had blowout earnings. What is that? Well, it's probably going to jump up and then continue to sell off aggressively. Just if the patterns of companies reporting earnings and have had these ballistic runs, that seems to be the par for the norm right now. Lewis says AUD USD currently at 78% net short. Interesting. I wonder when that shifted. I don't have the numbers available to me, but if you look at this chart, my guess is a lot of people were short during this rally too. And these we can kind of backtrack to one of the most common mistakes that traders make. They're buying after a really big move up, and they're selling after a big move down. And right now they're buying this thing on the upside. My guess is now you've seen this all of a sudden flip short. That could probably actually lead to more upside movement. Dave Stewart says, I find Lululemon products fascinating in general. Yes, especially the fact that years ago they were on the hook for making yoga pants that when the individual wearing the yoga pants would bend over, the material would actually go transparent. That made for some very, very fun yoga classes, I must say. Anyway, we won't go down that path. Cool. That's going to do it for today, everybody. I don't have any last-minute questions that have come in here. Hopefully you enjoyed that one with Walker England. Tomorrow, I am going to have the Ambassador of Opportunity, John O'Donnell, on the show. I think I am. I've been trying to. His Skype doesn't work, but I found a way I can do Skype and I can call him. I don't know how long I'll be able to make that call because I have a certain amount of credit. You have to call his landline. But I'm going to be talking to John O'Donnell, the Ambassador of Opportunity, tomorrow. If there's anything specific you want me to go over with John, we'll usually do a lot of macroeconomics. Maybe look at some nice charts out there, as John is always bringing up great charts for fundamental reasons. Let me know what it is that you would like us to see. You can go out to TraderMerlin.com, which is going to be that one right there. You can send in questions right on the front page or type them down below the chat here. You can also, if you are new, you can hit that subscribe button. As you guys know, we do this show pretty much every day, Monday through Friday at 2 p.m. Pacific. That will do it for today, everybody. Thank you so much. Hope you have a fantastic day. I will see you tomorrow.